Thanks, Jerry. I think we're missing a few people. I see Ian has joined us. Kesem has joined us. Do we have, yep, we got John Lee. Do we have Graham? Graham Moore and Marikio. So we might be missing Graham and Marikio.
Yeah.
Mauricio's coming.
Mauricio just joined.
Okay.
And yeah, we're just waiting for Graham right now.
Okay.
So let me just ping Graham a message, and hopefully he'll join in shortly.
There we go.
All right, I think that's everyone.
All right. Can you hear me okay, first of all?
Yep.
All right. So thank you, Jerry, and welcome everyone. I'd like to start our panel. We're going to be talking about funding and growing your early stage blockchain company with a phenomenal group of company leaders in our panel. We're going to first of all start off with introductions, and I'll just start off. I'm your moderator. I'm Linda Montgomery, and I'm a fintech marketing leader and advisor for a number of companies. I've done a lot of go-to-market launch work with companies like BlockStation, Blockchain Intelligence Group, and CoinChange. Sorry, I'm just going to close my window so you can't hear the fire engine out there. And I'm also a writer for international publications on convergence of digital assets and blockchain, and advisor at Mars. And let's go to our panel now. Let's start off with Kesem.
Hi, everyone. Good to see a lot of good friends from years back.
Yeah.
My name is Kesem Frank. I'm the president of a company called Mavennet. We deal with I'd say kind of the core of the technology, blockchain for enterprise. That's kind of my background. Originally, I was one of the blockchain practice leaders at Deloitte. Worked a little bit with the Ethereum guys when they were based a couple of blocks from us in Spadina. This is 2015, 2016. And yeah, I've been in the space ever since. So about 6, almost 7 years now, and excited to be here.
Excellent. John Lee.
Hello, everyone. My name is John Lee. I'm currently the innovation engineer at Shopify, and I'm leading some of the efforts on some of our blockchain work. Currently, I am a member of the technical steering committee at DM and leading some standardization efforts around blockchain. Previously, I was blockchain lead for the Buns project and for Mixspace, and I've done some blockchain work at TD Bank when they've initially investigated the process, although right now I don't believe they're doing much about it.
Let's go to Graham.
Yeah, hey everybody, this is Graham Moore. I'm the head of tokenization at Polymath. So I've joined Polymath as the first employee back in September 2017. At Polymath, we're focused about all things security tokens, so regulated financial assets on blockchains. Outside of Polymath, I wrote the first ever ABC book about Bitcoin called Be It Your Bitcoin. And I'm also an advisory board member at Red Swan. Red Swan's a commercial real estate marketplace for tokenized securities. They've tokenized $2.2 billion of securities at this point. Thanks.
Awesome. Let's go to Mauricio.
Hi, everybody. Can you hear me okay? Yeah. Hi, Mauricio Di Bartolomeo is my last name. I'm the co-founder and chief strategy officer at Ledin.io. If you don't know Ledin.io, we offer credit and savings products for Bitcoin, and we also have a USDC savings account. And yeah, that's me.
Last but not least, Ian.
Hi, I've been in the space since 2017. I'm helping too many companies in the space. currently CTO of Bridge Mutual, but also I'm a partner at Zokyo Ventures. And our model presumes that we accelerate blockchain companies participate in the token launches. Have been behind maybe up to 10 launches recently. Proud of it. Would love to have more time to focus on every of the companies. Happy to be here.
Great. So let's jump in with our first question. Let's talk about a couple of the biggest challenges you faced in growing your company or project. Actually, most of you have companies, and how you've dealt with that. And keeping in mind, I guess, our audience, we're looking for insights for the Block Hack audience of future companies. So let's start with Kesem.
Yeah, absolutely. Thank you, Linda. So to me, it really boils down to two kind of things from the perspective of challenges, of course. It's the product market fit, meaning can you actually come up with a concept with something that people want and that will scale, meaning you can sustain it as demand increases if you actually created something that people want. The other one is talent. Like this is, especially after the year we've had, I've never seen the market so incredibly competitive for just good folks to join teams. I think that, I could definitely point 5 years ago, before 5 years ago, I could definitely point to a few companies that were kind of outliers in the sense that they were, fully decentralized, dial in, do whatever. But that's kind of reality for everyone. So when you kind of take the physical, restrictions, the physical shackles away, you really end up, especially in a domain like ours, blockchain, right? Which isn't a huge domain. It's obviously much bigger than it used to be, but still, the competition is just crazy. So if anyone is, I'm thinking about it as an employer or a prospective employer, if anyone is on the line looking for a job, very good timing to be on the market.
Yeah, great. Why don't we move to Graham?
Yeah, I'd echo what Kesem said. Hey, Kesem, good to see you again. Talent is huge, especially when you have the blockchain space, which is just so hot right now. Hansel so hot right now. You have companies like Coinbase, Gemini, a bunch of these other huge behemoths that are just hoovering up every single person they can. And so they're constantly reaching out to everybody who's at JP Morgan, Goldman Sachs, and pretty much any financial institution, every developer who wants a job, they're talking to every single person trying to get them. So yeah, talent is a huge one. That would be a big challenge that we've had at Polymath. So we're about a 50-person team right now. We're trying to grow that. We're building our own blockchain. We need Rust developers. Rust developers are not cheap, right? So they're getting anything like $200,000 to $300,000 US per year to be a developer. So it's very hard finding, especially that really high quality technical talent. And then the other one that sort of Kesem alluded to is product market fit. So are you too early? Is a huge potential challenge in the blockchain space. Are you building something that you think is going to be, quote, the future of finance in 2030 or 2045? Well, it doesn't matter because you'll be dead by then. So you need to build something today that people want to use today and that they're willing to spend money on. So those, I would say, kind of two biggest challenges that we face.
Great. And it must be so hard to find those data points to be able to evaluate product market fit also. All right, Mauricio, do you have any comments?
Yeah, hi everybody. So I think the nature of your problems as you're growing a startup change depending on the stage of the startup. Typically, there's a saying that says like you're constrained by capital until you're not. And so at the early age, it's really about demonstrating that you can raise and that you have product market fit and that you can execute. So I think there's a bit of a rush right now in that people just want to raise before they execute. And I actually think that's a big mistake. I think now, because execution costs have dropped so low, to essentially bootstrap your first initiative, I think the first key piece is to show that you can get some clients, that there is somebody interested in what you're offering. It's great then when you go to your investors with some inkling of what you're going to do, you're giving them a tease of what's happening, of what you can do, and then you show them that you have the team to execute this with. And that kind of, if you do that right, that helps you get through that first raise. And at the very early stages of most companies, you have to be very, very resourceful on how do you deploy that cash, because you typically don't raise enough to kind of take you through forever or infinity. And so then you get through that first little bit, and you have to actually go and execute a little more, right? And that actually tends to be the most challenging, because somebody already believed in you. Now you have to go really execute and bring back numbers to increasingly bigger and bigger investors for bigger and bigger checks, right? And so that first piece is difficult. That second piece of that delivery, again, and finding that real product market fit is also challenging. And it actually never stops being challenging. The challenges just change, right? And so once you are no longer capital constrained, then your biggest challenge is typically talent, right? Because then you have to keep stacking up the business with amazing people. So I would say the challenges change as the journey progresses. But I think if I had to give any kind of tips or advice, is that have some type of product market fit is probably the easiest, because otherwise you're just sitting there explaining way too many abstract things. And also show that if given this opportunity or this raise, that is this initial seed that you're looking for, that you have a really tight plan and the people in place to go execute on that. So that would be my 2 cents.
Okay, great. And that sort of gets us into fundraising also. But let me just pass this initial question to Ian Arden. You certainly have a lot of background with multiple companies, like internationally. What are some of your biggest challenges, and maybe we can move into the fundraising side of it as well.
Right, of course. So, well, first of all, we never raised a dime from a VC firm. And we did try to raise. Our impression from trying to raise from VC firms would be that it's just not worth our time. So we ended up building the product ourselves. We've been in a position to actually make revenues on the consulting side of the business and then reinvest them in the products. Yeah, and we started our product back in the bear market of 2018, 2019. And now for us, doing the tokenization and launching the products through the token on the IDO would be the way to go. I think almost any company that is a good product market fit and has a good blockchain use case would be pretty viable in terms of raising through the token. And we have helped a lot of companies there. There is it's tricky though. It's becoming really controversial and not so obvious in terms of what you have to do to be successful. Just to give you an example, the projects who have raised in the recent past are sharing the opinion that they did not actually need the capital whatsoever. All they needed from the raise was the community support, the value add partners, and they should have done the fair launch instead of any kind of like seed pre-sale round and what have you. And then when you launch the token, if it's supported by the community, then your token treasury is worth so much that if you liquidate part of it, you'll be very well set for the upcoming months or years. Mm-hmm. So my take, because of our perspective, would definitely be to go and try to raise money through the tokenization of your project.
Interesting. I guess so. That's part of the challenge, is knowing which route to take it. at any particular point in time.
Yeah, yeah. By the way, I wanted to add to the previous item, which was about the growth. So everything boils down to like basically three resources. So people, money, and time. And I think we didn't touch upon the time really so much. I would give an advice that one should not try to chase the hype of the current market, because you'll usually be late. Just really try to stick to what your heart and mind tells you about, like your long-term value that you are building, and be prepared for the long haul. It will usually take you longer to build the product that you think, and the hype cycle usually lasts shorter than you think.
Right.
And
Great.
we'll be ready to support you with the capital.
Yeah, great advice. So I want to jump to John Lee. John, you're such an innovator, and you just have such a great background. Can you tell us what some of your challenges have been, innovating sort of within larger companies, I guess, and also challenges of building projects in companies also.
Yeah, of course. I mean, right now I do work for Shopify, so it's a much larger company, I guess, than what's been out there. And the question that was asked about some of the challenges people face, like Shopify itself hasn't faced a lot of those. But I think one of the things that has been mentioned, and I agree with what everyone has said, the concept of that demand and pinpointing demand is such an important aspect, because right now Shopify does help others that are entrepreneurs that are launching their businesses, and that's actually like the perspective I'd like to put on it, because people launching their own crypto projects, I think oftentimes gets fixated on a couple avenues of funding or a couple avenues of growth that kind of been tried and true and that's out there. But oftentimes with any new technology, there's always new opportunities to look at alternative ways. And a good example are some merchants out there that are actually in the process of providing a good for a set. I think the previous panel was talking about NFTs, which obviously has been a massive area of growth in the recent days. But there are merchants who are not technically based. There are companies that are being created that are not so much technical, but more on the actual use of creative assets. And those companies are growing by actually making sales and actually converting a profit through their sale. There's also a lot of tooling companies that are now in the process of providing services to people who don't quite understand technology and are translating technology to them. So I think that there's a lot of different growth opportunities that exist, especially through being the service or being the end customer link back to the technology. And I think that opportunity does exist now.
Yeah.
Hey, John.
Really good point.
Linda, is it okay if I pose a question to John?
Sure.
Awesome. So I just want to examine. So I don't know if people know, but John, and I mean it, he's a freaking genius. He's definitely smarter than I am in anything and everything technical blockchain. You were the spearhead of the TD blockchain strategy way back when. So if I think for a second on what Ian said, right, that it boils down to people, time, and money. You guys had so you clearly had the people. You had the money. I don't think TD is running out of it anytime soon. And this is like 5 years ago. You definitely had time, yet nothing came out of it, right? Like there isn't really a blockchain thing in TD today. So John, well, clearly something was missing in the formula. Well, what's your perspective? How is it that, I'm not going to say that you didn't own the space, but how is it that it didn't really go anywhere ever?
Yeah, I could definitely answer that. And I think I would answer that twofold. Like, I think the thing that's the clear thing that was missing from the three things that was mentioned is will. And by will, I mean, it is both the executive and the company's will to actually double down and want to develop a product. Part of the impetus for TD to get involved in the project in the early days, like I've been out of TD for 4 or 5 years now, but the early days when TD started exploring, and I think it was like the 2014, 2015 era, was really because it was taking off. It was a talk. It was the dream that was being sold within the crypto communities about a replacement of a cryptocurrency, and that had to be explored, right? Because it was a risk, and it was de-risking. It was a de-risking exercise, really, in some of those early exploration. It wasn't a will to actually launch a product on a blockchain or just related technology. It was really that de-risking exercise that led to, I think we came up with some concepts around things like hybrid blockchain, where you had like a hybrid proof of authority, proof of stake kind of architecture that made sense for the bank at the time, and that's how you would want to proceed with them. But at the end of the day, like, there was no executive buy-in per se, because it wasn't really like, you say money was available. Absolutely, money was available, but nobody knew what was going on. And because nobody knew what was going on, money from a TD perspective, like, the couple $1 million they spent on it was not even a rounding error under books. So from that perspective, it wasn't really material. I think it's really important to think about it in terms of, if a company has, say, $10 million in their reserves and decides to spend half of it in development for a product, that says a lot than a company who has $10 million and choosing to spend $100 on that exploration. Right. And that's the way I think you have to think about it. Is like, what was the will behind some of the exploration that happened in the early days of blockchain, especially around like that big ramp up that happened to 2017, 2018. It was really just like, hey, what is this? Can we de-risk ourselves against this? And let's just take a look at it. But nobody had a concept of, this is the product that will solve our issues. And so I think that's why it didn't really end up going anywhere. I think like the current explorations that are happening with a lot of the bigger firms actually has like end customers in mind. And I think that's the main difference.
It's phenomenal. I think no other person, in my mind at least, your arc of starting at the bank, right, which was back then the second largest Canadian company by market cap, and their lack of resolve, lack of vision, lack of execution leads them to sliding down. And you today work actually for the biggest Canadian company by market cap, which is not even a bank, right? Technology. So maybe I want to add, because thank you, that resonated a lot, John. And maybe I'll just add to what Ian said, that no, it's not just people, money, and time. Vision, risk tolerance, execution, and resolve definitely are needed to make it work.
Absolutely.
Let me
Risk
suggest
tolerance.
the opinion, though,
Key, right?
Linda. I would like to suggest an opinion that there was too much hope for blockchain in the enterprise space, and to me, it doesn't seem like banks need blockchain, nor blockchain needs banks.
I completely agree.
They seem to live in like the two parallel worlds, and bankers are even afraid of the word blockchain. Try to walk in the branch and say, I want to open the bank account with your bank because I want to do crypto and blockchain startup. You're better off say, I'll be selling cocaine. They would take it easier.
Yeah.
Well, I think that like when you look, sorry, are you?
But yeah, well, but returning back to what John has said previously about the founders who are finding the product market fit and are actually servicing the customers, I would like to bring a perfect example. I'm working with a super talented entrepreneur called Brandon Smith from Bondly. And Bondly is exactly the NFT provider who have sold between 20 and 50 million worth of NFTs and have done so through Shopify and through other e-commerce platforms without even having their own full-fledged product, because we are currently building one for them. But it's a perfect example how you can think simpler and try to service your customer now in the manual way, albeit more expensive for you internally, but think about automation later. It's a perfect approach, I would say. I'll shut up now.
Yeah, interesting.
Just to add to that, I think that like comparing, the banks used to blockchain to something like FedEx or DHL or any supply chain company that has end-to-end vertical integration is tough, because blockchain is best for many different entities that just don't trust each other inherently. So when you're talking about something that owns the whole vertical, like blockchain has limited value. I mean, in a bank, it has value to unify different branches and different departments in a cohesive way. But like back to the FedEx example, I was exploring working with FedEx for a little while, and we there were a couple use cases that moving forward would have made sense, but for tracking and package kind of package tracking, that's already something that they have built in, and it's something that's completely workable. But when you're talking about a package trail that goes from manufacturer to local exporter to international movement or international shipping, and then local distribution, there's a lot of different pieces in that chain that could go wrong. So blockchain for a unified, almost trust layer on top of all of those companies really makes sense. But to bring it back to that single entity, we have limited use case. We have limited use case of blockchain technology in the West, in my opinion, in the Western world or more established world. But when you're exploring, like Vietnam is the perfect kind of country to draw my example to. At each level, the distributor purchases the package from the previous person. So the user doesn't pay until the package is at their door and they buy it from that local distributor. Sorry.
So we only have like 5 minutes left, so I want to sort of draw back to our, if I may, there was just I guess we were getting into fundraising, and I think this conversation is really focused on, it isn't about fundraising. It's like really at this point really focusing on your customer and that product market fit and serving that customer, whether it's through a blockchain solution or something else at this early stage. But if we could talk about fundraising, I'd like to get your feedback on how you guys funded your companies, and I guess what advice you'd have to the founders today. So why don't we start first with Mauricio? You've got an impressive list of VCs that fund Ledn. Can you tell us about your fundraising story?
Yeah, happy to. So I guess to say it, I mean, there's more than one way of raising funds in the crypto space. Obviously, the predominant way has become tokenizing your product and sort of creating some sort of tokenomic around the product. Ledn didn't do this. So Ledn is just a traditional called VC-backed company. That was challenging because way back when we started, most investors just wanted tokens, and the ones that didn't, they didn't understand, Bitcoin really, or crypto in general. So I think it really depends on what the business is. I mean, there are definitely some funding options that make more sense than others, depending on the type of business. So in for what we wanted to accomplish, we decided very early on that it would be better not to do a token. And again, that was we were kind of swimming against the tide at the beginning. There's not that many crypto companies at scale that don't have a token. But when you get that right, it works very, very well. Because especially as you get onto the bigger and bigger and bigger VCs, less of them understand tokens. So if you want to continue going higher and higher and essentially try to have a public event, that was really the kind of path that we wanted to take. Now, that's not to say that's the only path. And I think the hardest thing to convince the earliest VCs at the beginning was execution risk. So like, who is the team? Can you trust these people? Do they have the right plan to get the seed? Once you get the seed, to get to the next step of that, you have to actually show numbers. So you have to start deploying that cash.
Yep.
So my advice would be just to think about what the long-term goal of the business is and how your fundraising option will play into the future of the business. Don't just try to solve for quick money because that may actually come back to haunt you in the future. So, another lending company that did a token like Salt, they got a cease and desist from the SEC. They had to get back $30 million. That's one of our competitors that did a token. So again, that hasn't happened to say Maker or Aave, but it depends, right? So it just really depends on what you're trying to do, who you're trying to go after, and what the long-term plan is.
Okay, let's move to Graham. Polymath originally did an ICO. How do you use? Tell us about that story and how are you looking at fundraising today?
Yeah, so we did a private token sale to accredited investors only, filed the Reg D form. So I mean, we wouldn't call it an ICO because most people, when they think of ICO, they would, you know, there's an address somewhere on a website and you send your crypto and you get some crypto back. So you know, we engaged legal counsel and we found that doing a token sale that was private, filing a Reg D was sort of our way to go about that. And so I mean, that worked very well for us. So we did a $59 million token sale over 2017 and the beginning of 2018. So, you know, advice on that side, you know, be at the right time. I mean, that's the easiest way to do it, right? Timing obviously isn't everything, but oh my God, does it make things easier in terms of fundraising? So I guess that would sort of be one piece of advice. And then the other one is, you know, you have to have the ability to tell a good story.
Right, for sure.
And so if you are pre-product, pre-revenue, and you cannot tell an amazing story about what you're doing and what you've done in your past and how you're going to be able to excel in the future, people are very likely to part with their hard-earned dollars or Bitcoin or ETH or whatever, and give it to you.
All right.
So that would be sort of my advice there.
Excellent. So we're almost out of time. If Jerry allows, we'd like to get maybe we'd like to hear from our last three speakers if we can go over just a little bit. Is that all right?
Yeah, we have actually plenty of time left over. So if you guys are willing to stick around, you know, definitely we have time for you guys.
Yeah, great. Love to hear from Kesem. And also, we were going to talk about the pivot. I was wondering if you could talk about fundraising and also the pivot that many founders have to go through.
Sure. Okay, so let me just put it in context. My answer is I agree with what Mauricio was saying, you know, about the different phases and stages, but I'm only referring to you're a first-time entrepreneur, right? No real track record to point to in this domain. Probably you come from some track record, but it's not necessarily in venture creation. And how do you get through that hump? Because really, once you have done it before and you could point to something you did, makes it a lot easier. But for anyone on this call or watching it later that's a first-time founder, I'll just share my personal experience, or perspective rather, I guess. It's really about the team. I really like investing in people that are smarter than I am. Really, like, because if they're less smart than I am, I don't think I want to put my money in there. There's a trick to it though. There's a catch. A lot of time, really smart people have really weird personalities, which is great. You know, there's a correlation between being eccentric and being really smart. I come to look at that as absolutely an indicator that I like to see in an investee. The more profound problem, however, is the story. You know, it's hard if you're gonna come and pitch me on something really complicated or really sophisticated, right? Really technical. Not necessarily will I be able to follow, and not necessarily do I want to actually dedicate all these cycles to understand, to make sense of what you're making, of what you're saying. I've missed out on a few really good opportunities because I couldn't follow, to an extent that today I no longer think it's necessary. If I find a person, if I find a team that I really like, they're really smart, they're really dedicated in their integrity, which is really necessary in this construct, and their integrity is beyond reproach, I just invest in the team. And I trust that if they're smart enough and dedicated enough and have that integrity to, you know, face a challenge on the initial idea, I trust that they're smart enough to pivot this successfully as well. You don't necessarily, like, obviously there are no guarantees in life and even less so in business, but when you invest in someone, it automatically converts you to their biggest fan. Like you care, you really want that person to succeed. So I tend to find that the most meaningful of these relationships happens after I invest, not before, where now I have this vested interest in somebody succeeding. And things tend to align after. Like you make the time, you put in the effort, you actually start hustling for that team. So yeah, so sorry, long-winded answer, but really for anyone who's a first-time founder out there, make sure that there is a connection with the person sitting in front of you. At the end of the day, it's all people, and that would be my advice.
Yeah, great advice. Ian, can you talk to us a little bit more about fundraising and your stories of fundraising for your various projects and clients?
It's funny, I already prepared some smart thoughts about pivoting. And you're asking me about fundraising, which I'm happy to talk about as well.
And pivoting also.
Yeah, so on pivoting, because I think it's important, like people do suffer with when they don't get the right feedback and they are trying to figure out if they should pivot and how to pivot and stuff like that. I think it's best of all if your strategy and your plan actually is a series of pivots, and you have the you have the response to every turnout of the situation. Just to give you an example, one of the products we are working on, have been working on for 2.5 years, is called milestone based, which is basically the escrow system for post fundraise funds tracking, yeah, so that the community could track where the founders are spending the money that the community gave to build and grow the product. But we started this amidst the bear market, and nobody needed it. And right on the get-go, like we had to pivot, yeah. We had two ways, we told this to ourselves, like, let's build something that a more conventional industry would accept, a product that say would be useful for VCs and startups overall, and not even like talk about the escrow system and blockchain and smart contracts. But then when the bull market comes, we should get back to the blockchain story, and we should be ready for it. But if the bear market still goes on and there is no bull market, then we'll continue the VC angle. However, if we find a large LP, then we'll only get to work with that LP's money, and we'll change our strategy. So your pivots have to be the part of your plan, and then you'll be relaxed all along the way. That's in pivoting, yeah. Fundraising wise, it's so now is obviously a good time to raise again through the tokenization. I don't think you need to raise as in the exchange of tokens for money before you have launched the token, because what is happening at the moment is you don't know what the price of the token is going to be, and usually in the current environment it just shoots up in the sky, yeah. And now it turns out that your private sale investors have made 10x, 30x, 100x, yeah. And what they are doing right now is, while they are sitting with a lot of capital in their token that they received from you, they'll start dumping the token on the retail buyers who have bought out from Uniswap or any other exchange, and that's a shame, really. And turns out that many of those investors are not value add at all. Like they stop responding to your messages once the transaction has happened. So this leads to one more advice: when you're signing the soft or any other investment agreement, make sure to write out the KPIs and OKRs for the investors. If they are promising you that they will introduce you to somebody, or they will engage the opinion leader and write Medium blogs for you, make sure to put the precise numbers in the agreement, so that if they don't do that, you're able to basically withdraw the agreement on the month one, refund them, and not send them any more tokens. And then you'll end up with a pretty good treasury if your market making is fine, if everything is okay, and the treasury is in tokens. So you will need to, well, first of all, try to pay people in your tokens. Secondly, liquidate part of the tokens to the exchange so that you build up the runway for, say, the bear market. And thirdly, you'll start getting offers from the OTC guys, many of whom would be scammers trying to, get tokens out of you. But you'll receive many deals where you'd be able to basically partner up with strategic investors, whom you will sell a significant supply of your tokens. That's the model I have experienced personally, so that's the only one I can speak of. I respect venture capital and all the other models as well. You can be successful anywhere if you know what you're doing.
Yeah. All right. Let's go to John. Do you have any comments on, well, certainly the pivot? I mean, you live in a world of pivots, I'm sure.
Yeah, I mean, there's definitely tons of pivots that occur and that happens, ebbs and flows. I think just to address some of the stuff that's been discussed previously, I think there is the ability for individuals that are starting a business to look at what their customer base is telling them, and that being the guides for the pivot. Like I know that oftentimes it is the investors, it is the advisor, it is the sets of people you surround yourself with, but I think we're coming closer and closer to the end customers that you're servicing at the end of the day. And I think that there's a lot more within the blockchain space that is happening that allows you to actually communicate directly with the set of people that you would service, and truly appreciating like the end user needs and pivoting based on that. I think is something that now has to figure within the discussions of what it means to be an early stage startup.
Thank you. All right. So we are 10 minutes over. Jerry, do we have one last question for all of our panelists? We'll ask them what they're excited about.
We could do Q&A if anyone has questions.
Sure.
I know someone in the chat had a question about the like basically opening a shop in the US and compliance stuff, but I think that conversation would be better have with Amber, who's having a compliance and legal talk later this afternoon at 3:30.
Right.
So yeah, if anyone else has questions that they want to ask our panelists, I know Kesem had to leave, but if anyone has questions, feel free to unmute and just ask away. Anyone?
Are there any like fair launch projects that stand out to any of you that you would like to tell people about?
Yeah, I would highlight Badger, launched by Chris Padifera. He's out of Toronto. It was a true fair launch, and the price did really well for the Badger. And I would love to see more of such projects. We are actually preparing a couple of projects who are going to be the fair launch projects. Milestone based would be the first of them.
I didn't catch that name.
It's milestonebased.com.
Oh, milestone. Right. Milestone. Awesome. Anyone else?
No, I'm not too familiar with fair launches, but one thing I read that stuck with me, and just from a few friends in the DeFi community that I have, I've heard that predominantly what people point at as the most recent, call it successful fair launch, was YFI, launched by Andre, and that project did really, really well for a little bit, and for a while, I like to study ways of bootstrapping companies and bootstrapping fundraising, and how that bootstrapping then relays into your governance later on. And he wrote a post after essentially giving founders tips on what he would have done differently. And I thought that was a fascinating post. I don't remember exactly what the name is, but I would recommend anybody that's interested in a fair launch to go read it, because it definitely changed my perspective. And himself giving the feedback of arguably the most successful recent fair launch and what he would have done differently, I thought is very valuable if anybody wants to take a read.
I have a question, if I may. So I guess for me, I'm, first-time founder of Black Magic Bank. That's my project. It wasn't what I worked on the hackathon. That's just, I did a side project here. But I guess my question is kind of how to build your first initial good team. As someone, my background's in chemistry. I started to learn to code, mostly front-end HTML, CSS, JavaScript. But I'm trying to figure out, how do I move forward in that, selecting people who can push the project to be successful, and what maybe networks to tap for that, and those type of things as someone who's newer to the foundation, to being a founder, and also to the crypto space at large. Thanks, guys.
Somebody might give you a really fancy answer, but I looked at my friends. And in fact, a lot of the people, like Adam, who's co-founder of Ledin, is one of my best friends from university. Mina, who's our CTO, was actually a friend of ours from university. Ken, who's our general counsel, also went to school with us. And we find ourselves interviewing people that were either in our school year or the year below. We have people from, I want to say, like over 22 countries right now at Ledin. So definitely not all friends, but friends and also family, actually, believe it or not. So like my brother works at Ledin, my cousin works at Ledin, and they bring two things. One, you have, once you have a personal relationship with them, you know them, in a large way what to expect from that person, more so than you would from a random that perhaps has a very interesting resume, but you just don't know how that person will react in certain situations. So I think your closest network typically is the best one. And that's also the most likely people to believe in you and to believe in your project and to take that risk. Because don't forget, like for somebody that's, not the founder, even if you are giving them a great compensation package, they're likely having to make a trade-off of something else. So they have to be really, really bought in and believe in you more so than anything else in your plan. And so that's where I would look first.
Yeah, I agree with that. I actually have and people you trust. Empathy is really important. The reason why is I was on a team, I think it was during my time in one of my blockchain startups, where we had a team of 5, and I had one of my engineers. We all took the 2-week break for Christmas, and literally, January 2nd comes around. He just decided not to show up, not let anyone know that he was doing something else. So yeah, definitely people you trust, definitely friends, and people that you can relate to on a personal basis, because that's extremely important, especially at the early stage.
Yeah, I like what Buffett says on this. Warren Buffett's not too big on crypto or Bitcoin, but yeah. So I'm just reading this quote off here because I love it so much. Hold on, where is this on the page? Yeah, somebody once said that in looking for people to hire, you look for 3 qualities: integrity, intelligence, and energy. If you don't have the first, the other 2 will kill you. If you think about it, it's true. If you hire somebody without integrity, you really want them to be dumb and lazy. Right, because if you hire someone who doesn't have high integrity and they're incredibly hardworking and they're incredibly smart, then they're going to do bad things. They're going to hurt other people. They're going to take people's money, and so that's really not what you want. So it's really all about integrity, intelligence, and energy.
Anyone else have anything to add?
It's all well said. Amen.
Yeah. Okay. Well, I think we've done this subject justice, and I wanted to thank all of our panelists for offering their insights and their experience. And thank you very much. Back to Jerry and the Block Hack.
And thank you, Linda, for moderating all of
Yeah.
this.
Yeah, thanks, Linda.
Yeah, thanks, Linda.
Thank you, Linda.
Yeah, sorry for being hard, panelists, Linda. Bye now.
No, it's great. Thank you. Bye.
Cheers.